If you're new here, my name is Melissa Lewis and I'm the founder of ML Property Venture. On this channel, I talk about property investing from a slightly different perspective, focusing less on hype and more on how property deals actually behave in the real world. In my first video, I shared my story about how I bought my first property at the age of 26. In the last video, we talked about why many property deals fail and how investors often analyse deals far too optimistically. Today, I want to talk about the lessons that came after I bought my first property, because buying property teaches you things that spreadsheets just will never show you. So, these are the lessons I learned early in my journey that completely changed how I evaluate property investments today. And interestingly, most of them are things that people rarely talk about. My first lesson was on buying being the easy part. One of the biggest surprises for me was this. Buying the property was the easy part, almost. You go through the process, you handle the paperwork, you exchange contracts, and eventually, after many months, you receive the keys. It feels like the finish line, but in reality, it's just the starting point. Because once the purchase is complete, the responsibility fully begins. You're now responsible for the property itself. You're responsible for the tenants, you're responsible for the finances, the maintenance, and every single decision that follows. And that responsibility doesn't always feel exciting. Sometimes it feels quite heavy and quiet and lonely. That was one of the first moments where I realised that property ownership is very different from the theory of property. When you buy your first property, there is no one else to fall back on. So every decision ultimately comes back to you. Repairs, maintenance, tenant situations, unexpected costs, they are literally all your responsibility. I remember one of the first moments that really made that clear to me. It was within the first few months of owning my property, and I woke up to a beeping sound somewhere in the flat. My first thought was simply this, like, oh, I'm the one who has to figure this out. So that might sound like a small moment, but it was symbolic of something much bigger. Ownership means accountability, and that experience forced me to develop a level of self-trust and self-reliance that I didn't fully appreciate beforehand. The third lesson, property is as much emotional as it is financial. I learned this very quickly when it came to property investing. It's just not all pure financial, you know. There is a significant emotional component, especially when you're new. As a first-time buyer, every issue can feel bigger than it actually is. Every unexpected cost feels dramatic, and every decision feels like it carries enormous weight. Over time, I realised that emotional regulation is an underrated skill in property investing, because if every small issue triggers a strong emotional reaction, decision-making becomes much, much harder. Calm thinking becomes incredibly valuable when you're managing property over the mid to long term, especially. Lesson number 4. So another lesson that surprised me early on was just how much property investing is about people. It's easy to look at a property deal and think purely about the numbers. You know, you look at the purchase price, rental income, the yield, but the reality is that tenants bring emotions, expectations, and just total unpredictability. I remember one situation early on where a tenant complained about something very small. There was crumbs being left near the toaster in a shared kitchen. At the time, I felt responsible for solving every single issue. I know. But eventually I realised something far more important. Not every problem requires intervention. Sometimes the best approach is to allow adults to communicate and resolve small issues themselves. That lesson pushed me to build clearer systems and boundaries rather than reacting emotionally to every situation. Another lesson I learned is that small assumptions in property can become expensive lessons. Early on, it's easy to assume things are going to run smoothly because everything looks fine on paper. But property rarely behaves perfectly. Unexpected repairs happen, tenants move on, Costs appear that you didn't initially anticipate. These moments taught me something important. The numbers in a property deal need to be resilient, not just attractive. And that realization eventually became one of the foundations of the framework I now use to analyse property deals. So, lesson 6, structure is essential. So, over time, I realised that property investing requires far more structure than people initially expect. When you're responsible for decisions, finances, operations, things can become quickly overwhelming without systems. So this is why I look at simple structures, and I have clear processes for tenant management. We have clear financial tracking, clear boundaries when handling issues, because structure reduces stress. And more importantly, it allows you to make better decisions because you're not constantly reacting to the day-to-day problems and issues that can and will come up. Looking back, these experiences changed how I approach property completely. I stopped looking at deals purely through the lens of projected returns. Instead, I started asking different questions. How resilient is the cash flow? How complex will this property be to operate? What risks exist in the financial structure? And how easy would it be to exit this investment in the future? Those questions eventually became the foundation of the framework I now use when reviewing property deals. Buying your first property teaches you things that no spreadsheet can. It teaches you responsibility, it teaches you emotional discipline, and it teaches you that good property investing is as much about structure and decision making as it is about the numbers. In the next video, I'm going to break down exactly how I analyse property deals today using our in-house core framework. And if you're currently evaluating property deals and you want a structured review, a second opinion before committing capital, you can apply for a core deal audit where I analyse potential investments through this exact framework. Thank you so much for watching, and I'll see you in the next video.